Yesterday at 8 p.m. Eastern Time, it was announced that MSTR would be entering the Nasdaq 100. This means that index funds like QQQ, which holds over $200 billion, will now be passively buying MSTR, which is effectively a conservatively leveraged Bitcoin position. This means that millions of Americans that may have exposure to the Nasdaq index in their brokerage account or retirement accounts now have serious exposure to Bitcoin. But it doesn't just stop there. There is something very unique about MicroStrategy's business compared to every other public US equity. And this unique business model may create a serious positive feedback loop as it enters the passive index fund market. Let me explain. Ironically, MSTR is actually similar to Coinbase, but instead of selling worthless crypto tokens to retail investors, MSTR creates unique Bitcoin exposure products like intelligently leveraged equity and convertible notes to meet the unique needs of different investors. The leveraged equity is an aggressive Bitcoin position, and the convertible notes are a more conservative Bitcoin position. But the very unique thing about MicroStrategy's business is how scalable it is. The company is pretty simple. It's another Bitcoin bull market, so demand for their two core products is extremely high. Mega Bitcoin bulls like leveraged Bitcoin equity. Conservative institutions new to Bitcoin like convertible notes. At the end of the day, these are just two Bitcoin financial products that the market has been begging to buy. The market is demanding that MSTR expand their business almost every day. This would be like Home Depot, Walmart, or Target having access to an almost infinite untapped market where they could instantly build new stores, hire fully trained teams, stock inventory, and market to the masses, repeating the entire process effortlessly by the next morning. Obviously, they can't do that. Nobody can. But MicroStrategy's unique business model does enable them to do this because we're living through the monetization of Bitcoin and almost nobody has figured that out yet. Where this gets crazy is what this implies for passive index fund flows. Right now, many Americans blindly throw money into the S&P 500, target date funds, QQQ, and all sorts of mindless passive index funds. As of now, it seems increasingly likely that MSTR will eventually get added to all or most of these index funds. What's fascinating, though, is because the business is so scalable, unlike every other public company in the world, and the market is begging Saylor to issue new shares to grow the business, then the market cap of the business will continue to grow every time the company issues more equity to buy more Bitcoin. How? Well, it's simple. If MSTR has a $1 billion market cap and it's valued at a multiple over its Bitcoin, for simplicity, let's just suggest a multiple of 1, then if MSTR issues another $1 billion of equity and buys another $1 billion of Bitcoin, then the market cap increased from $1 billion to $2 billion overnight. And critically, when the market cap of MSTR grows, the passive index funds are required to increase their allocation to MSTR and decrease their allocation to other companies in the index. This means more and more capital will mindlessly flow into MSTR over time, enabling Saylor to scale the strategy even more. Effectively, MSTR is on the cusp of eating the passive index fund market, which ultimately could force existing public companies to adopt Bitcoin as a primary treasury reserve asset as well. Thanks for watching, everyone, and see you next time.